Welcome back to another video. Ever wondered why the rich continue being rich and the poor continue being poor? Well, the simple answer to this question is their investment decision. In today's video, we share with you how the poor invest versus how the rich invest. If you want to learn the ways of the rich and be like them, then you better watch till the end. 1. Invest in all types of assets. Some people believe that they can only invest in a particular type of asset, mainly the tangible assets. Most rich people diversify and invest in both tangible and intangible assets. You will find that a rich person has invested in bonds and stocks, residential and commercial properties, gold and land to name a few. They normally have a diversified portfolio which cushions them when the performance in one area goes down or is affected by adverse market forces. The poor man will most probably look into investing what is available depending on their available capital. They are drawn back from investing in physical assets such as real estate mainly because of the high capital investment required, and also the fact that it is not always easy to liquidate real estate assets. The poor will more likely invest in assets such as bonds and stock which are easy to invest in and are highly liquid. 2. Invest not only in the developed world but also in emerging markets. Although there is more security in investing in your own country, most rich people are not constrained by their physical boundaries. They do their research well and invest in other countries where they are sure that their investment is safe and secure and will offer good returns. They do not shy away from investing in emerging markets so long as they are within their investment strategies and portfolio. The poor, on the other hand, will be uncomfortable investing outside their borders for fear of making losses. Most poor people are risk-averse and will only be comfortable in their cocoons and hardly venture out. It is synonymous with holding the little you have for fear that it will slip through your fingers. This is why the poor will tend to remain poor as they curtail their growth. 3. Investing in private markets. The wealthy or the rich have the understanding that for you to generate more wealth, it is advisable to put your resources in the private sector instead of in the public sector. There are many factors that make public entities which are normally owned by governments to yield low profits. Most are normally mismanaged and decision-making is slow, leading to a loss of opportunities due to their bureaucratic nature. Private companies, on the other hand, are more competitive and in most cases well managed with clear accountability guidelines and have increased ability to perform better and make more profits. The wealthy make a lot from private businesses where they invest as angel investors or own the business. The poor may not be in a position to invest heavily in a private business, and the shareholding they acquire may be minimal. This may discourage a poor person from investing in such companies. 4. Competition. The rich person will most of the time focus on his business strategies and how to drive them to accomplish his laid-down goals. The most important thing is his goal, not necessarily what his neighbor is doing. When laying down the business strategies, great consideration is given to make sure all the market factors are captured and risks mitigated. This gives the business owner peace of mind to pursue his goals. However, the rich investor will always be aware of what is going on around him, but will not allow himself to be distracted. The poor are always monitoring what their neighbors are doing with an intention to imitate them or even rise above them. This can sometimes distract them from their main goal. This competitiveness is not healthy as it can put you in a position where you are always copying what other companies do without researching and finding your own path. A poor investor is likely to spend all or almost all his profits as they come along and show off to their friends instead of reinvesting to build their business. The rich will usually build their businesses until the point where the surplus profits from the business will buy their once-in dreams. 5. Balance investment portfolio. When you do not balance your portfolio, it can end up skewing in the wrong direction against your strategies. The rich are very careful to do this balancing by reviewing their investments and the direction they are taking from time to time. It is important to ensure the portfolio remains proportionately allocated and maintain the diversification desired of the correct mix of investments. The poor investor may not always do this, partly because his investment is small and has no diverse assets. 6. Saving strategy. Most rich investors have a saving strategy which they use to save their money. To produce wealth, the rich understand that even as they invest their resources, they also need to save their money. This is a good tactic where the cash outflow is less than the cash inflow, reducing the likelihood of being in the red or negative side in your books. This translates to living below your means or using less than what you earn, which will eventually shorten the time you take to attain your wealth goal. On the other hand, the poor in most cases are unable to employ this strategy due to the fact that their earnings are little and may not cover their expenses. However, a wise poor investor will save a few coins, which can eventually build up to something substantial. 7. Continuously looking for investment options. Rich people are always looking for new investment opportunities. They do thorough research before they invest their money. They ensure that they have many streams of income to achieve the wealth objectives. Most rich people will not stop investing, but will keep investing even after they reach their goal. The most sensible thing they do at this point is to push their goal upward. Maybe the money they make becomes a motivator in their life and drives them to make more. A poor person may look at things differently. They may fail to put in the time for research, falling for whatever opportunity comes their way. The poor mainly focus on short-term investment to make enough earnings to satisfy their basic needs. The amount to invest will act as a limiting factor on what the poor can invest. 8. Limitations. When a rich person plans to invest in a specific area, it is most likely that he has the money to invest from his wealth. His creditworthiness is also in a better standing, and funds from the bank in the forms of loans are easily accessible to him. This reduces the limitations he encounters when investing. On the other hand, a poor person may not be in a position to borrow from many lending institutions and may find himself in a place where he is totally limited in investing. This makes the poor invest at a disadvantage as compared to the rich person. Availability of funds is always a drawback in how the poor invest. 9. Invest small. Most of the rich people we see today started small and grew their wealth with time. When you start small, you see your investments grow, and in turn increase your wealth. Most poor people will find it hard to start with the little they have and fail to invest, thus making their lives poorer. 10. New opportunities. It takes a determined and a strong, ambitious person to invest in the unknown. Incidentally, this is what some rich people do. They wait in territories that others have not tried as long as they can see a glimpse of light at the end of the tunnel. And most of the time, this pays handsomely. The poor are usually risk-averse, thus they find it hard to invest and are not ready to risk the little money or resources they have. Poor people tend to invest only in areas that have been tested and proven with time. The only caveat being, these areas don't usually yield great returns. Well, that's it for today's video. Thank you guys so much for watching. If you are still here, it probably means you enjoyed the video. So don't forget to leave it a thumbs up and share the video with your friends and family. Also, go ahead and subscribe to us if you haven't already. Have yourself a great day, and I'll see you all in the next one.